In business, the National Treasury has initiated its intention to buy back the $2 billion Eurobond set to mature in June 2024. This comes after a raft of mixed signals from the Executive and the National Treasury on the best way to settle the country's debt. The buyback now offers Kenya an opportunity to demonstrate to investors its ability to repay the bond. And although the National Treasury has not specified the target amount, experts say the buyback may target upwards of 50% of the total amount. Jimmy Mbogo has more.
In Kenya's inaugural Eurobond will have the next 7 days to declare their intentions to sell. This is after the Kenyan government offered to buy back some of its tenders from the $2 billion bond, just days after Ivory Coast and Benin went back to the international capital market for financing. According to Churchill Ogutu, an economist from IC Group, Kenya's timing of the buyback is critical to boost investor confidence, even as the Treasury hunches mal another issuance.
The fact that the government is offering to pay back investors, by that itself means that the government is able to pay back, because market adjusts to information quickly, and that's why I've been reiterating the fact that yields have really bounced back.
In the tender offer, the government has invited eligible holders of its outstanding $2 billion bond to tender notes for purchase in return for cash, subject to the maximum tender amount offered. An issue that Ogutu now says will quiet any uncertainty that investors had, noting that the default risk was over-amplified. Sentiments echoed by both the National Treasury Principal Secretary and the Central Bank Governor.
And I know there has been a lot of concerns about how we are going to deal with the maturing €2 billion Eurobond in June. And I think that has led to a lot of uncertainty and people wondering whether the government will have enough reserves to be able to pay for that debt. Where will it get those reserves?
At the worst case, before a maturity, look at your FX reserves levels. Are they adequate to be able to service the outstanding $2 billion? So from that worst case scenario, I mean, Kenya will have easily drawn down from the FX reserves and sorted that $2 billion.
Although the government has not specified the amount it intends to buy back in this tranche, experts say it could be targeting at least 50% of the $2 billion Eurobond, subject to investors' appetite. With all indicators pointing towards another Eurobond issued by the Kenyan government, experts say that the buyback could be used by the government to spur investor confidence before going back to the market. Jimmy Mbogo, Citizen TV, Nairobi.